of the show. You can think that Bobby and I are full of shit and think our opinions are worth nothing. Sometimes we think we're full of shit. But one thing you cannot deny is that for some odd reason, outstanding guests say yes to us. Now, please, let's just not say anything about it because I don't want to mess it up. But we today have Lyn Alden, founder of Lin Alden Strategies, and the author of Broken Money, which is an amazing read. If any of you guys haven't read it yet, please pick it up. Before we get started, I want to thank our sponsor, Independence Arc Farms. We always complain about big conglomerates controlling our food supply. We can do something about it. Patronize smaller farm to table local farms like Independence Arc Farms. Also, please join us on the newsletter, theunfilteredinvestor.com. Bobby, I got that right? The unfiltered
Yeah,
investor.
it's unfilteredinvestor.com. Don't put the in for. I don't think. I'll correct it in a minute.
Yeah,
I don't
we run such a tight shop, the two of us. Lyn, so good to have you. Where are you coming from? New York?
New Jersey at the moment.
New Jersey. Okay.
Happy
So
to be
did you
here.
vote? Did you vote in the election today or no? The
In New
primaries?
Jersey, no, I didn't.
You can't because you live in New Jersey, right? Yeah. Anyway, your book, I mean, it's one of those books that you read it and it's like, holy shit, she's right about a lot of things. Um, Bitcoin is something that you're primary, but I want to get to gold a little bit first. Central banks around the world have been buying gold. It seems to me that if you're into decentralization and completely removing counterparty risk, that you'd be a big advocate of gold based on those parameters too. Is that true?
It is, yeah. I've been long it for quite a while, and I think central banks and investors in general having assets that are not on someone else's ledger and can't be just
Right.
unilaterally debased is really valuable. So yeah, I've been a big gold proponent as well.
Okay, but why Bitcoin above gold? What is appealing to you about that asset?
Two things. One is that gold has an issue where it's slow. A tangible example: Germany wanted to repatriate its gold in the 2010s. They initiated the process in 2013. I forget the number of years they budgeted, but it was in years that they planned to do it.
Right.
They were happy that they were able to do it within 3 years. At the cost of millions of dollars of repatriating their gold, all of the physical transport, the logistics, the auditing, it's a cumbersome process. Whereas with Bitcoin, you can settle final value, so irreversible value, within the hour at any size. And so it's basically a way to run a ledger in a decentralized way with its own scarce units attached. It's basically kind of like a Fed wire and a gold combined together. So it's a settlement system with its own units. That's pretty interesting. And number two is just as it's small right now, it's growing into whatever its total addressable market is going to be. So if someone has a thesis that the capability is valuable and that it's the leading um, asset in that category, so it's a category that benefits from network effects, kind of protocol dominance, just like any other sort of communication protocol. You say, well, what's the total addressable market? Right now, out of total assets in the world, Bitcoin is something like 0.2% of total assets. Gold is something like 2%, about one order of magnitude bigger. I think both of those numbers are probably going to increase, but Bitcoin is increasing from a smaller base. And so I think Paul Tudor Jones, I think, phrased it well, which is it's the fastest horse in the race. So between the two, in my holding period, Bitcoin's given much better returns. But it doesn't mean you have to only be exclusively in the potentially higher volatility, better returning asset.
All right. So before I ask you a question, Lyn, first of all, I did this before we started the show, and I decided to save it for the show. I asked AI to draw a picture of Jimmy or produce a picture of Jimmy, and this is what they came up with.
Why? Like, why is that?
Conspiracy. I guess you're known as a conspiracy guy, Jim. I guess that's
Oh,
what.
fantastic. I am a conspiracy
So
guy.
you have the biggest tinfoil head
Oh,
ever
good. I think
possibly
they nailed
available.
it. I think they got it right, except for the
Yeah.
facial hair. I've never had facial hair.
Yeah, I saw that picture and I just made that shit up.
No kidding.
So yeah. So what I wanted to ask you, and I did want to get into Bitcoin. I didn't know we'd get into it right away. I hold a lot of gold. I trade Bitcoin. Um, I get what you're saying, and some things that I tell people when they ask me, my answer is always, and I think Michael Saylor stole it from me because I know he listens to absolutely everything I say.
Every podcast. Yeah.
But I heard him say it the other day. And Jimmy, you know, I've been saying this for a while. I think Bitcoin either goes to 0 or 1 million, and then probably in excess of 1 million over decades as we get past that, if million is the target.
Put a time frame on it. When in 5 years it's 1 million or
Well,
zero?
that's what I don't know. The issue I have with Bitcoin is it possible, Lynn, that we're really going to, that the government is really going to say, we're essentially giving up the monetary system? And by the government, I mean globally, not just the US. And am I wrong in thinking that they actually are giving up the monetary system if Bitcoin, quote unquote, wins?
Well, I don't think they're going to do it easily and voluntarily. I think a couple of factors there. One is the government's not a monolith, at
Mhm.
least in most countries. So there's people in Congress that like it. There are people in Congress that are afraid of it and want to ban it, literally. And kind of a big spectrum. A bunch of people that just don't think about it, don't understand it. So a big spectrum in there. Same thing for presidents. I mean, Donald Trump was opposed to it in his first term. He explicitly didn't like it. Now he I think a lot of politicians are increasingly realizing there's money to be made from lobbyists and entities and votes to be had from people that like it, whereas there's very few votes or money to be had if you specifically oppose it. It's game theory there. There's also kind of a jurisdictional arbitrage. So if one jurisdiction doesn't like it, another jurisdiction can say, well, bring your businesses and your wealth here, and we'll treat you better. So I think that it's got that going for it. And the other kind of comparison is like, so if you look at weaker countries that have currency issues, they don't particularly like being dollarized usually.
Sure.
But if it gets bad enough, the dollar just kind of imposes itself there. People pick it from the bottom up. It's very hard to fight back against it. And so it's possible in the future, when we're talking Bitcoin being, seven figures a coin, that kind of scale, that it could start heavily pressuring some of even the bigger currencies. It can kind of do to them what the dollar does to struggling emerging markets. It's not always voluntary, and you have people in there that saying, there are politicians saying maybe we should dollarize. There are other politicians saying no, we don't want to dollarize. We already see that in kind of Bitcoin friendly or anti-Bitcoin politicians in the U.S. So I think it'll be a similar dynamic, and I do think that they'll push back on it in different ways. We already see, for example, I think they've kind of conceded the asset side of it, which is to say, you can hold it in an institution, you can hold it in an ETF, you can hold it, yourself if you want, but it's a taxable asset. So just like gold, just like real estate, just like equities, that's how they're currently treating it for the most part. It's not a security, but it's property, and that's I think one of their kind of last pushbacks against the whole thing, and this will be a very long thing, is one, they don't like privacy, and two, they don't like you be able to spend it as easily as you can money. And I think those would be the kind of the last two things that they'll probably in 2030s we'll still be having this conversation. They'll still be pushing back on those things.
Okay, so you kind of answered. I had two questions, and then you kind of answered one of them with the. It's still going to be important that we're able to spend it. That it's got to be actually a currency in order to replace currencies globally, right? Right now, I think most people that even people that invest in it regularly look at it as an asset, not a currency. I try to look at it as a currency, and I just can't wrap my mind around it. And it could be because I'm as dumb as the headset on your head, but I'm just trying to like understand there's so question number one is a little bit of a I should be wearing the big tinfoil thing that I just said to Jemmy. And then question number two, I think is a reasonable question. From a perspective of years ago, we heard about these EMP attacks that were going to come from somebody to the US, that the grid was going to go down. What is the solution for Bitcoin if that actually became a thing? Or are you just of the opinion like, look, we got bigger problems if that actually happens than what happened to your store of value?
Yeah, so a couple things. One is, I mean, if you have electricity itself going out, that's there's more going on than just the money itself. Now, Bitcoin it doesn't mean your Bitcoin gets deleted. You can store your seed phrase
Right.
in metal, in on paper, on metal. It just means that basically, if you don't have electricity or any sort of telecommunications, you're kind of cut off from the Bitcoin network, just like you'd be cut off from your bank, your credit cards, whatever other kind of electronic payments you have. Um, if you envision a future that's kind of Bitcoinized, there could be entities that issue paper backed by Bitcoin. So you could have a government or some other private form of money. So you could have analog ways of transferring Bitcoin, as well. There already are bare assets that do this, like Open Dimes and Sats cards, although they are somewhat more electronic. They like that kind of aspect to it, but you can do ones in trusted ways as well. So there are kind of ways to get around that always on electricity need. Um, and so it's more just like living in the modern life. I mean, anything without electricity is a problem.
Right.
Um, and as far as spending goes, I think I mean, Bitcoin's going through a cycle where in a niche case, it's a good fallback spending. I mean, one of the first use cases was WikiLeaks. This is back when Bitcoin was just basically invented. They were cut off from all their donation portals, like all their centralized ones, and they started accepting Bitcoin donations. The Human Rights Foundation basically helps people in authoritarian countries turn to Bitcoin or stablecoins when they're debanked or otherwise facing kind of frictions there in their centralized system. So it solves this kind of niche transfer capacity now. But money has network effects associated with it. And so, in order for something to be a desirable medium of exchange, both the sender has to have some and the receiver wants to receive it. Um, and right now, I mean, Bitcoin's a $2 trillion network, but it's spread around the whole world, right? So, like in this drawer next to me, I have Egyptian pounds, Egyptian currency, and that's money in Egypt, but it's not money here. Nobody wants to hear. It's harder to spend Egyptian pounds here than it is Bitcoin in New
Oh, that's
Jersey.
interesting.
Yeah, and it's Egyptian money just fails to be money outside of Egypt, especially outside of any country next to Egypt. And that's true for I even have Norwegian currency, and I make the argument. I mean, Norway is a rich country, and it's equally hard to spend a handful of Norwegian kroners here in Jersey, just because it's a small. We're far away from the network effect. So Bitcoin has this like pretty big scale, but it's very distributed. So if you kind of picture an asset. What could you bring with you globally as a bearer asset? So not like this, chain of credit from credit cards that you can be cut off from. But what could you bring with you as a bearer asset that is going to be widely accepted? Number one is probably the dollar. Almost anywhere you can go, it'd be fairly easy to get a dollar off of your hands. Number two would probably be gold. Silver is probably three, or up there with gold. And somewhere in the top 10 is Bitcoin. It's up there with like there's the euros up there, Swiss franc maybe, and the Bitcoin's in the top 10 already in a world of 180 currencies. If you were to bring it, many urban centers in the world, there are ways to exchange Bitcoin for the local fiat.
Yeah.
There are places you can buy gift cards with it. You can do stuff online with it that you can't do with gold and silver. And so it's in most places it's not a very liquid asset to get off your hands, but it's once you start getting it out of the top 10, most currencies are, I would say, worse than Bitcoin. And it's got no kind of central monopoly area that enforces it, like an Egyptian pound or, you know, the Norwegian kroner and so forth. But as it gets larger, more liquid, it would have to be much larger in order for it to be kind of common money. Right now, it's more like portable capital, which is like a step to becoming money, is how I'd phrase it.
So you still do see it as, I mean, right now, obviously, it still is an asset that you have to exchange for fiat, but you see a future, whether it's 20 years, 50 years, 70 years, where you won't have to exchange it for fiat. You can just use it as you would a US dollar in Guatemala or something like that, right? You
Yeah,
do see that
yeah.
as its future.
If it's successful, yeah, and I mean, even now, there are plenty of ways to spend it. It's just that there's a lot of frictions for doing so. It's
Yeah.
hard to spend everything in Bitcoin, but I personally know people that do the majority of their spending in Bitcoin. They find ways, and there's these kind of hubs in the world where there's more density than normal in terms of acceptance. So Bitcoin Beach in El Salvador was kind of the beachhead there. It's kind of, I guess it's a pun, but um, that was like the little community that has an unusually high rate of Bitcoin adoption.
Mhm.
Madeira is also kind of high up there. There's a bunch at Bitcoin Jungle in Costa Rica. There's these little like areas where there's kind of these hubs, and what some Bitcoin users do is they actually kind of move to those hubs because they like that aspect to it. Um, and other people, there's like hacks you can do where they kind of buy gift cards with Bitcoin and can kind of do all sorts of stuff. So there are ways to kind of remove yourself from the existing system with a bunch of frictions. But yeah, I think the longer you kind of play this out, the easier it gets and the lower frictions there will be.
So one thing that's bothered me about, and I'm not a Bitcoin maximalist. I've said many times, about 7-8 years ago, I began buying Bitcoin. I really don't trade it. I just buy it on a weekly basis and just have been accumulating. One thing that bothers me is that, and I'm going to put this in two parts: the correlation with the Nasdaq. My understanding is that when big institutions started trading Bitcoin, whatever, how many years ago, they threw it to the NASDAQ guys. Theory being these guys used to volatility, it's a volatile asset. So over time, the two assets became highly correlated. So one, is that thesis real? And two, do we need to see Bitcoin and the NASDAQ decouple as its next step to getting where you think it's going to be?
I think that'll happen eventually. I don't think it's a step that has to happen anytime soon. I think that, especially ever since 2020, we've been in a macro heavy environment where liquidity drives a lot of things.
Heck yeah.
And so a lot of things are correlated with liquidity, and therefore they're correlated with each other, especially risk on tech focused assets. There are scenarios where Bitcoin can do well and Nasdaq would suffer, and that would be, for example, anything that is fine for liquidity but bad for Nasdaq margins. So trade wars, stagflationary scenarios, certain things like that can impair or changes in tax policy or certain types of industrial policy from kind of a top down perspective. Certain things can impair margins in a given jurisdiction, like in this case, the US, while global liquidity is still fine. And if anything, that's probably my base case is kind of we've been in this kind of period of structurally rising corporate margins. And I think we're probably going to start hitting the ceiling of that. Doesn't mean we give that all up, but I think we maybe stop going up for starters. Um, and if we do get one of those kind of like globalization cycles, so some capital, instead of being stuffed into the US as it has been for the past 15 years, every once in a while you have these kind of cycles where some money comes out. So this happened in the 2003 to 2007 period. It happened again in another cycle before that. If we get one of those periods, I think you'd probably see Bitcoin do a lot better than the Nasdaq. Um, and so, but what I do think they have in common is they both have heavily correlation with liquidity, and that's going to continue as long as right now the most saleable money globally by far is the dollar. That's what most global liabilities are denominated in.
Yeah.
Obviously, within a country they have other denominations for many liabilities, but certainly cross-border liabilities. And as long as that's the case, liquidity is kind of the name of the game for a lot of assets.
Right. Okay. So here, but first of all, I wanted to thank you for saying if it succeeds. I hate the Bitcoin people like who are who are so 100% sure. And you being someone who's been in financial markets forever, we're not sure of anything. We're just thinking with the base cases, and I appreciate that's very refreshing. Can we flip it to stable coins and central bank digital currency? When I hear governments releasing stable coins, I start to get scared that this is a gateway drug to central bank digital currencies, which I think governments for forever, the one thing for control that they lacked was the ability to surveil. This gives them the ability to surveil. Does the existence of stable coins make you worried that central bank digital currency is coming? And if not, why not?
Well, I mean, central bank digital currencies are already here in multiple markets, so they're not just a hypothetical. They do exist. I mentioned the Human Rights Foundation. They also have a CBDC tracker. So they monitor this around the world to kind of say, okay, in a given country, what's the status of CBDC? Some of them are in practice, some of them are in the field, some of them are in development, some of them have no specific plans. And so it is a global ongoing issue, and the reason they track it is, like you said, for surveillance. Just the fact that they're concerned around government surveilling, especially very authoritarian governments, but any governments in particular. Um, so stablecoins, I think we're even as putting CBDCs aside for a second. Stablecoins arose because they solve a problem, which is there are entities around the world that want dollars. It's very hard to get dollars in many countries, and so having these digital dollars is useful. Another way of thinking about it is it's like an offshore bank account, except for the middle class rather than just the upper class, because technologies compress the overhead of
That's
basically
interesting.
having one. So
Love it.
so Tether is now everyone's like offshore bank account essentially that wants one, and so that's solving a problem, and that's why they're proliferating. And back in January 2021, I wrote that I think that stablecoin market cap's going to keep going up. So in addition to be bullish on Bitcoin, I'm also bullish on stablecoins as at size, and it's gone up. Back then it was tens of billions, and now it's hundreds of billions. And I think it has more to go. But then uh, the United States could use that as essentially its privatized CBDC. I mean, they already work with stablecoin providers. They can, if they want to free certain assets in a certain jurisdiction that's sanctioned, they're able to do that in many cases. They're able to surveil a lot of it. And so that does give them more capabilities. It's a cash alternative, except it's more surveilled. So it comes with pros and cons. And just like physical cash, it doesn't pay you a yield, which was, I guess, fine in ZERP because nothing was paying a yield. But in an environment where there is yield, you kind of want to minimize things that don't have yield, so you only use it when you're getting its specific benefits, which again, many people in jurisdictions in especially very inflationary jurisdictions are kind of happy to hold on for a couple months worth of yieldless dollars. Um, and then so bringing CBDCs back into it, yeah, I do think that there are multiple countries that either have them in practice or are pursuing them. The U.S., because we have a little bit more decentralization in kind of these decisions. I think we're it's good that we're kind of slow to get one out there. Um, and I think increasingly they'll be rejected. They've all, I think, been slow, like even in China, they've been slow to be used for a reason. I mean, usually the private sector alternatives are better and smoother, even though they're almost equally surveillable. Um, and they kind of realize they can get most of what they want from just tapping into those private payment pools anyway. But yeah, I think we'll see a future for at least for a long time where there's gonna be a mix of all these things. Basically, there's gonna be Bitcoin, there's gonna be some other cryptos, and then there's various types of state issued money with stable coins being the new tech. I mean, anyone who sends an international wire transfer can see the value of stable coins in many cases. Anyone who needs dollars in an emerging market, had trouble getting them, can be useful. Anyone who, it's funny when you go through an airport, it's like, you can't have more than $5,000. There's like signs there, and it's like, well, you can memorize 12 words or write 12 words down in your luggage somewhere, and
Yeah.
how
You
much
have
money do you
everything.
really have on you at that point?
Right. Yeah.
So it's just it's a new tech for the world we live in.
I have so many. I mean, I don't want this whole show to be about Bitcoin, and I want to respect your hard stop, but I just have so many questions for you because I personally think you're one of the most credible people that brings this forward the way you do. So let me just go to this question if I could. We know that gold specifically there are non-reportable vaults that hold gold. So you get sort of the privacy aspect there. Although I don't know who the hell has the vault. Like I don't know who can get in there, who can't. There's just sort of an element of faith there, right? When I look at the overall situation, and I say to people, Bitcoin's going to zero or a million. What do you personally think? Because you're not that kind of person who just says, yeah, this is where it's going and that's that. What could put it down to zero in your mind? Maybe
I
it's
think
nothing.
Well, I think for zero, and we see even very unpopular altcoins. Uh, I mean, even after a decade, they don't go to zero. They just diminish and stagnate and become barely functional. But they're just they have some kind of like minor residual value.
Sort of like pink
Um,
sheets.
yeah, and if you start with Bitcoin, because it's much larger, I mean, it would have a much longer lifetime in that stagnant state, even than these altcoins. So I think in order to literally go to zero, like literally be on not worth anything. I mean, there's actually a
Yeah.
standing joke that Adam Back, he has like a bid on, I think, Bitfinex, where he's willing to like buy all Bitcoin for like a penny each or something. So he's like, well, with that bid, they literally can't go to zero because I'll buy it
Yeah.
all.
Yeah.
So there, but like, but when we say like, what would structurally impair it so that it stays small and irrelevant? I would say a couple of things. Some sort of like major insurmountable technical flaw. Maybe the shift to quantum impairs it in a way. There are upgrade paths, but as a decentralized network, it can be hard to update sometimes. And so it could be set back in some meaningful way. There are various forks that could, like when it forks and kind of one side wins and one side loses, it's able to kind of recover from even these pretty severe disaster scenarios. Um, but there's still a risk to monitor. And then the other one would be if something just came out that was like 10 times better, or just so powerful that it could breach the network effect somehow. And I often push back on some people they assume that because Bitcoin was the first one, it can't be the winner, that something new has to come along and replace it. But what we actually see from technology is that protocols are different than other types of technology, that because they benefit from network effects and simplicity. So for example, we've been using Ethernet for over 50 years now. It's, internet protocol, simple mail transfer protocols, that one's over 40 years old. USB is going on, I think, 3 decades now. They do upgrade in backward compatible ways, but they achieve this kind of like network effect dominance. And I put Bitcoin in that communication protocol category. And so far, they have indefinite lifetimes. Like we don't know how long lifetime has because in the entire internet age, the answer so far has been indefinite, once Ethernet or Internet Protocol or Simple Mail Transfer Protocol or USB win, they win forever as far as we have this in place. So I think Bitcoin is in that camp. So something would have to severely disrupt its functioning, or completely come out in such an order of magnitude better that it could pierce the network effect and just leapfrog it, despite the massive,
Right.
self-reinforcing network effects it
And
has.
it can't be a little bit better. It's got to be significantly
Exactly.
better. Yeah. Okay.
Yeah. Yeah.
So is this? I always think of gold and Bitcoin as I've 6, 7 years ago, my mistrust in the stewardship of the dollar portfolio, which is gold, silver, Bitcoin, real estate, platinum. Here's my base case on what the Fed does. We have a lot of debt. I don't know if this is news to you, but we have a decent amount of debt, and some of it has to be rolled over this year. My guess is that at some point in time, the sheer volume of bonds that need to be sold is going to start, pushing yields up considerably, and I think the Fed will jump back in and start buying bonds again. And when they do, I think there's going to be a window to pour into some of these assets. But I do think that if that happens in earnest, it will be heading us toward a I don't know, dollar crisis might not be the right thing, but a significant dollar kerfuffle, whatever. Do you believe in that base case?
I do believe that we'll have dollar kerfuffles. Yeah, I think that's a good
Okay.
word because
I
I
still don't
think
know what that word
Me
means.
neither, but I like it. Right.
yeah, yeah, I think so I do think that by either late this year or next year, we'll probably go back to Fed balance sheet expansion.
Right.
They'll run into some sort of liquidity problem, kind of similar to the repo spike of 2019, something like that, and go back to some degree of balance sheet expansion. We've also seen recent noise around SLR exemptions, so easing the supplementary leverage ratio for large banks, which would potentially, when we get to that point, allow them to be kind of warehouses for treasuries, and then they could be a little bit kind of pressured behind the scenes to absorb treasury issuance. When we look back in history, the 1940s were the only time in American history where we had similar debt levels to now. And if you look at most measures, banks held a tremendous number of them. Like banks held something like a quarter of all debt, like federal debt. The percentage of bank, like the ratio of treasuries to total bank credit was something like 70%. Like basically their biggest asset by far was the treasuries they were holding. They all kind of became these big warehouses for treasuries. And I think we're kind of directionally, maybe not to the extreme, but we're directionally on that path, which is that the balance sheets, I mean, banks, because they have such flexible balance sheets, are probably going to be some of the places where these get stuck, whether it's SLR, and other factors, or the Fed itself, in some cases. Um, and I do think it will be challenging for the Fed to justify a growing balance sheet when they have inflation potentially still above 2%, the way they measure it. Kind of like how they couldn't really explain the repo spike and why they were expanding their balance sheet, and they were calling it not QE because they're not buying duration. Um, and I think you could see some similar awkwardness when they get to that point. And you could certainly have mini crises, like kerfuffles, if you want to call it
Yeah.
that. Like guilt, like
I
the
don't know
guilt
what that means.
crisis in the UK was a crisis, and yet 3 years later, life goes on.
Right.
So I think we'll see instances like that, where something happens, some fires put out, probably Bitcoin and gold go up, because it's good for liquidity, kind of negative for the dollar when it happens.
Yeah.
I think we'll probably see a series of those. I mean, I've been kind of pointing out that over the next 5 to 10 years, there's very low likelihood they're going to meaningfully reduce the deficit. And I do think that that period will be punctuated by periods of potentially mini crises, little liquidity things.
So I mentioned what I thought. Again, I could just contact you offline because this is specific to me. I mentioned to you what my irresponsible stewardship portfolio was, and I said Bitcoin, gold, silver, copper, platinum, real estate. I think that's pretty much it. What else belongs on that list? If you truly believe what I believe, that the Fed is going to say "fuck it" and start buying bonds hand over fist at some point in time.
Well, I think those assets do well. I also think that certain types of equities can do well. So whether it's international equities, if you're, for example, if you are bearish on the dollar, there are countries and currencies out there that have a lot of dollar denominated debt, so they're kind of short the dollar, and that's been rough for the past 10 plus years. But if you get a dollar down cycle similar to the early 2000s, and similar, in kind of the prior two bear markets in the dollar in history, it should be good for international equities, particularly emerging market equities. Even domestically, um, I would generally pick a reasonably priced equity more than I would want a currency deposit or a bond in that scenario over any sort of multi-year long holding period. So I think that there are still equities you can buy, whether domestically or internationally. And what we know from kind of prior periods of debt crises and financial history, sometimes banks do better than you think because they pass the debasement onto their depositors. So, for example, like in the whole 1940s and afterward era, we were kind of suppressing interest rates and having banks hold them, but then they, by extension, were suppressing their deposit rates and passing it on to the depositors. So as long as the financial oppression is not targeted at banks, financial oppression, as long as it's not directly to banks, they can actually do pretty well. So there are pockets of things that can do well in this environment, including the precious metals, the hard assets, the real estate themselves, but also uh, equities. And another way of kind of looking at it is much like real estate, you attach a fixed rate mortgage to it, you inflate away the mortgage, and the asset does well. A lot of corporations do that with their bond offering. I often use the example that Coca-Cola has like $50 billion in debt. They've been profitable like every year for a century, and it's like why do they have debt? And it's well because they choose to, because they could issue like bonds for like 2% for like 20 years. Uh, and it's kind of like the best product they ever sold. Um, and they basically had these kind of the equivalent of like an optional mortgage, where they're basically just shorting the dollar and buying back either their own equity or expanding, whatever the case may be for a given company. But there are a bunch of companies that do that, and so one way of kind of shorting the dollar is by having these corporations that are kind of net, without, they're kind of net short the dollar, and kind of playing it that way.
So, Lynn, what do you see about getting off of Bitcoin for a second? What do you see about the rampant spending that's going on? Obviously, we have the big beautiful bill that is now back in the headlines since we, of course, have a rock solid ceasefire going on, and we have that in the headlines. And a lot of Trump's like hardcore backers were complaining
You're not
that
going to do your Trump
actually
impersonation. It's actually getting good, and you're not going to do it. Come on.
is the most beautiful bill you've ever seen. Everybody says it. Nobody says anything different than that. Best one out there. Um, now I'm all discombobulated.
That's a part about being
Yeah.
old.
So no, the question I have is obviously this is the bill according to the CBO is going to increase to 6.7% of GDP in terms of the spending excesses, and a lot of his hardcore backers were a little upset with that, and some of the people defending him saying he's just trying to win the midterms. Right. And once it gets past the midterms, you can actually slash and burn. What's your overall opinion? I mean, keeping politics out of it, because Jim and I don't really give a shit about that. But what's your view of what's going on fiscally, regardless of monetary policy, and does this actually hamstring the Fed at all?
So I wrote before the election that I think deficits are going to be big for the next several years, like next 3, 5, 10 years. And so that was even before I knew who was going to win the election.
Mhm.
And because I think over 90% of it is kind of locked in, and then they argue over the other 10%, which is the big spending areas are Social Security and Medicare. Largely because of aging demographics.
Mhm.
Then you have defense and interest expense. Uh, you can kind of lump veterans benefits partially in there with defense or with other areas. So very little of it is discretionary. Um, and so especially in the early kind of after the election, a lot of people were kind of bullish on the idea that Trump and the GOP is going to significantly reduce the deficit, whereas my view was they're not. Which wasn't a political statement because it was, if we had a Biden victory, I would have been saying the same thing because
Mhm.
if you just more entrenched. But I was like, no, we
A
kind of laid
math
out.
problem.
Yeah,
Yeah,
it's a
it's a
it's
math
more of
equation.
it's a math
Yeah.
problem. And it's an incentive problem. So one difference between the current GOP and say the 2010s Paul Ryan era. Now the GOP, their official 2024 platform was don't cut Social Security, don't cut Medicare, and don't raise retirement age. So they kind of joined the Democrats on that. Um, I don't think most people meaningfully thought that the GOP is going to reduce defense spending,
Right.
given the geopolitics, and then given just, I mean, that's the part that, if anything, is going to increase defense. Interest expense is kind of outside of their hands. And so a lot of that is just locked in. And all the stuff that Doge, like Elon Musk and the Department of Government Efficiency to focus on, those were like the nickels on the side of this whole thing. That's like the other 15% of the pie chart, and they're kind of swimming in there and trimming a couple things, while all these big parts of the pie chart are just completely It's a third rail to cut them. And then also, the GOP is not going to, other than maybe tariffs, apparently, they're not going to meaningfully raise taxes. If anything, they want to cut them and keep them low. So my base case was they're going to extend the tax cuts. And so you can get a slightly different flavor of the deficit depending on who wins, but a lot of it's locked in. And then we have the added problem that because the US is so financialized, there's so much global capital stuffed into US equity markets, and because we have pretty high wealth concentration, and because we have a lot of equity-based compensation, um, we have a correlation problem, which is that if you did somehow, in a miracle, do some degree of austerity and, like, say, cut the deficit in half, we probably would have a period of slower economic growth and bad asset prices from the hangover of that. And then with say, a 12-month lag, if you get flat to down like stock market, usually the tax receipts start to suffer because of that, because we're more financialized than most other countries. And so even then, you actually still have trouble getting the deficit down. So it's like the number of things that has to go right to invalidate my thesis that we're going to run deficits big for the next 5, 10 plus years is so improbable. So I monitor it. But yeah, my base case is just structural deficits, regardless of political changes.
So tell
You
me
know, the
this
minute
then.
anybody
Oh, sorry.
brings up a pie chart, I just want pie.
Yeah.
Like all I can think about right now is a slice of cherry
You
pie.
haven't
Go ahead.
had pie in a year, have you?
No, not in a year. It's been about a year.
Okay. What are your outlook in this whole scenario that we're outlining here, that you're outlining here? What's your outlook for equities? Let's say on a 6 month, year and a half basis.
So 6 months, I don't know because it's very headline driven.
Sure.
It's still fully not clear what's going to happen with tariffs. It's not clear what's going to happen with a bunch of things. Um, I generally view U.S. equities, like the large indices at least, as probably in a grinding sideways pattern for a number of years. Now that could be slightly grinding up. That could be punctuated by 20% drawdowns and such. But much like the 70s, they didn't really go anywhere. Or that even in the 2000s, they weren't particularly strong performing compared to other asset classes. I just do think in general that from both demographics purposes, potentially international capital rotations, existing valuations as kind of like a starting point. I mentioned before the potential peak in margins, um, where they don't necessarily go down. They might, but they don't necessarily go down, but they might just go sideways now. So they no longer benefit from that. So I think when you take a bunch of tailwinds away, especially on an inflation adjusted basis, I'm not very bullish on the multi-year outlook for American equity indices. I think there's a reasonable chance of international outperformance over the next, call it 3 to 5 years. Um, and I still think that the S&P 500 could fall relative to gold, and certain other assets, without being, say, super bearish on it. Just because when you have such fiscal dominance, when you're running, almost 7% of GDP deficits outside of a recession, that is kind of indirectly good for the stock market in some ways. So I think that the floor is somewhat held up, but I also think the ceiling is also kind of heavy.
So you're in that group of people who said that basically returns are going to be limited going forward for quite some time. I saw one article, I want to say it was Saxo Bank, but I'm not positive, that basically said that you're talking about low double digits, high single digits for the next maybe decade in the US stock market. But they didn't really give an alternative. So you kind of in that camp.
Yeah, I'm in that camp. I think they can still be positive, but it's probably not great. Not as good to say the 2010s decade. Um, and But I do think there are alternatives. I do think that gold is still underowned. I'm bullish on Bitcoin. We talked about that.
Yeah.
I think that a number of emerging markets are attractive when sized appropriately. And I've somewhat counterintuitively been pretty bullish on U.S. financials, especially on a total return basis, like when you include just kind of reinvested dividends along that kind of 10-year time horizon. Because I think unless I see signs that the financial repression is directed at the banks, I think they're going to be pass-through entities, and they're going to benefit from a rising monetary base, cheap existing valuations, kind of heavy doses of dividends and buybacks along the way. So I think there are certain sectors you can buy. I think there are certain geographies you can buy, as well as some of these other, non-security assets.
Why did the banks do so well today, Bobby or Lynn? I mean, I kind of was not trading today. I was just doing some media stuff. Banks killed it today. Any reason? Anyone know?
I think a major reason is just people are more relieved about the geopolitical situation. I
Okay.
think there's a pocket of uncertainty now. They're
Yeah,
yeah,
that
a
makes
little bit
sense.
more
Yeah, I
relaxed.
didn't see if Jerome Powell said anything that would have sort of any spark on that. I actually think his testimony was a little underwhelming, but also it was before the House, where again, Lynn, you mentioned something a few minutes ago. You said this is not a political statement. It just drives me crazy that we can't talk about this stuff without somebody
Policies.
immediately saying, oh, that's a political statement. Why is everything a political statement right now?
Yeah.
So
Yeah.
real quick, because I want to make sure we respect your stop here. First of all, there is no better pie than cherry pie. But second of all,
No, apple pie, hot apple pie is better than cherry pie. That's just, you're
no,
wrong about
it's
that.
absolutely not. You couldn't be more wrong. You just
Okay,
couldn't be more wrong.
whatever.
It's
We'll agree to
vanilla as
hate each other.
usual, Jimmy. You're vanilla as usual.
Rotten
Um,
hell. Yeah.
no, so from a perspective of gold, number one, what's your favorite way to own it? Is it physical? Is it, well, I don't want to ask you have it in your house. I'm sure you do. I do. Jim does. But what's your favorite way to own gold when that's the one you own? And you mentioned the performance of Bitcoin over gold and other things. Do you mean risk adjusted or just nominal performance when you say that?
Right. So for the first question, I think gold's attractive in multiple ways. I do like physical where possible, up to
Yeah.
someone's kind of security threshold. That's one of the benefits is holding a scarce fungible asset in your own custody. So that's
Yeah.
one of the advantages. Once you run in kind of a where security becomes worth thinking about, then you want to generally find non-rehypothecated, non-bank holding,
Yeah.
of it. And people, depending on what jurisdiction you're in, that there's multiple options there. You can spread them out. There are even gold-backed stablecoins if one wants some degree of international portability with that. Um, and so all that's interesting. For Bitcoin, depending on what time period you're looking at, I mean, their nominal returns have been so strong that even like the Sharpe ratio is still very high in most cases, in most time frames. So even on a risk-adjusted basis, Bitcoin still has really strong performance. Now, obviously, if you wouldn't want your whole portfolio fluctuating to that extreme degree, you'd have to position size it. But the way that I've generally positioned it is, when I say, okay, we'll start with a 60-40 portfolio, how can we improve that given the fiscal dominance that I've been forecasting and other things like that? Well, one was replace a slice of your bonds with gold. I think gold's better than bonds in this environment. And then consider replacing a slice of your equities with Bitcoin, because you're kind of comparing a similar or high volatility asset with a high volatility asset and a lower volatility asset with a lower volatility asset.
Sure.
And that's why I've been thinking about it. So they do have different volatility profiles. And with Bitcoin, at least, over the past 5 years, 10 years, you've gotten way higher returns, way higher volatility. So even risk adjusted is still great. It's just that you have to just be cautious of that.
Is there
Jimmy,
anyone
we
out
got 4
there?
minutes left, and I can't even ask a question in 4
You
minutes.
can't. You can't even ask a question in 4 minutes. Yes, I'll ask. Are there funds out there that you know of? Because when you talk about Bitcoin and it's risk adjusted, like it goes like this, but it goes higher. But we could easily option the shit out of that, and you lose some of the upside and lose a lot of the downside and smooth that out. Do you know of any funds who implement a strategy like that where people can invest in Bitcoin and only capture 70% of the upside with half of the downside using options?
Some of the MicroStrategy products are doing that.
Yeah.
They'll basically have Bitcoin, and then with MicroStrategy, you have fixed rate debt attached to it, like multi-year duration debt attached to it. Then they have preferreds. Then there are like ones that run that through an option strategy. You can also do it manually, just because MicroStrategy is such liquid and volatile options. For example, during I think it was the April sell-off, I sold cash secured puts against MicroStrategy to kind of harness some of that volatility. So
Right.
there are some vehicles out there, I don't have them offhand, but there are a couple of vehicles that do that, as well as I do think it's good to kind of play around individually if you want, because it is kind of a volatile and liquid place to even if Bitcoin chops sideways, you can still make a lot of money from
Right.
just
Okay. So I
selling
want, at
selling
this
your
point,
Bitcoin.
when I got your book, I listened to your book. So I don't have the hard copy to hold up right here. Bobby, do you have a hard copy of it? Lynn, do you have a hard copy
No,
of it
no,
to show
I'm
people
still
real quick?
waiting for it.
I
I
hate to
think it's
hate to make our prized guest show her own book, but believe me, I listened to this book and it is outstanding.
I got
It'll
one on the way. It's obviously in demand because it's not here yet.
no, it is amazing, and I hope everybody reads it because it's like a cautionary tale wrapped into just a absolutely amazing financial like
And it is,
thriller.
of course, a political statement. So.
And of course, everything's a political statement, and we're all highly political. Lyn, I'm going to eventually be the first person who's fired from CNBC for not hating Donald Trump enough, and then fired from Fox from not loving Donald Trump enough. And I'm going to wear that as a badge if it happens. So I want that to be out there too. Any final words from anybody? Lyn, where can they find you? The easiest way is Twitter, probably.
Yeah, Twitter at Lin Alden Contact, or my website, linalden.com. And thank you for having me. Enjoyed the conversation.
The pleasure is so much ours. Thank you. This has been a great talk. Thank you. Thank you to our sponsor, Independence Arc. Please join us on the Unfiltered Investor newsletter. You guys will love it. Bobby and Mike have been hotter than hell in the first couple months of this. Thank you guys. Thank you for all the support on this. This has been Futures Edge.